Today I'm going to be showing you what the Bitcoin bubble indicator is and how you can use it to understand what Bitcoin price has been doing and what it might do in the future. So let's jump straight in. We can see that we've got big red spikes here, which correspond to bubbles in the Bitcoin price. Let's rewind a little bit. The Bitcoin bubble indicator is, it plots the difference between the Bitcoin price and the 20-week moving average of the Bitcoin price. And the idea is that when you get a big discrepancy between the two, it shows you that there's been extreme stuff happening, either with the price going up or the price going down. When that sort of stuff happens, it's good to take note and try and quantify it in some sort of way. And that's what this indicator does. So if we turn off the extension area and just look at the price action with the color-coded extension levels on it, we can see clearly when it's red, that's Bitcoin bubble territory. Every single bull market endpoint has corresponded to either a long period of the red extension levels or just topping out around those levels. So it's a really good way of understanding we've been above the 20-week moving average. In fact, over 100% is the level that the red color corresponds to. If we turn back the extension area on, we can clearly see that we get diminishing returns from cycle to cycle. So we've made it to the red levels every cycle, but it's been getting less and less extended above the 20-week moving average. And with diminishing returns, which is a well-known fact, you've got to educate yourself about diminishing returns in the Bitcoin market, because if you go into investing in Bitcoin expecting to see 100x moves, it's just not going to happen. You have to adjust your expectations with diminishing returns. And that's just basically because as the price and the market cap increases, you need exponentially more volume to help move the price. And so let's get back to the chart. So if we are seeing diminishing returns, we might not even get back to the red zones. So how can we use this educational tool to help us figure out what's going to happen with the price? Well, if we don't get back up to the red zones, what zones are we going to likely get back up to? Let's turn off the red and then have a look. Okay, so we can see the next zone down, the next range is 75 to 100% extension above the 20-week moving average. We can't really see diminishing returns on these levels. This cycle, we haven't got back up there. The cycle starts around, the bottom is around here. So if we just zoom in here, there's 3 data points that are in the 75 to 100 range, right here. In the 50 to 75 range. Okay, that's even less. We haven't even got up to the 75 to 100 range yet. If we zoom back out again, every cycle's been up there. It's spent a lot of time there, apart from this one so far. So even going down into the 50 to 75 range, we've only spent this tiny amount of time in that range, and we haven't even been extended that far. So if the cycle is ending now, then this would be unprecedentedly low time we've spent above the 20-week moving average. So that suggests that we haven't been massively extended or in a Bitcoin bubble as of yet. I mean, what we have seen is basically a slow grind, a sustainable grind up in price, where we've been between the sort of minus 25 to 0, so that's below the 20-week moving average at times, and most of the time we've spent in the 0 to 25%, and then a little bit of time, if we zoom in we can get a better view, a little bit of time in the 25 to 50 extension range above the 20-week moving average. And that's just a sign of a sustainable move, in my opinion. Not Bitcoin bubble territory yet. But this indicator doesn't just show you the Bitcoin bubbles that burst and then you get a subsequent correction in price. It can also show you good buying opportunities when the price has been significantly undervalued below the 20-week moving average. So if we just clear everything off here, reselect the lowest levels. The lower than 50% was really, it only happened in after the first massive spike. We haven't really gone down there since subsequently, so we can kind of forget about that and treat the minus 50 to minus 25 as the actual, essentially the lowest level that Bitcoin goes to. And you can see after the the massive spikes, the bull market spikes and the bubble bursting, you initially get a large drop off and you go down to these levels, these minus 50 to minus 25% levels. And then further on the way down, culminating in the bottom of the market most of the time. Around here, you got the bottom of the market. And then after that, we don't go back to these levels until after the next peak. Again, here after the peak, we drop down to these levels. And then again on the way down. And then the bottom of the market, the lowest price you get. And the price that Bitcoin will never return back to again, hopefully. At least it hasn't done yet in 16 years when it reaches these lows after the peak. The only exception comes up here, which is the global shutdown, the shutdown of the global economy due to the government's reaction to the COVID virus. So that's kind of like a black swan event. But that's the only time that intra-cycle we've gone down there after already forming a low. So we've gone back down there and it wasn't the low, it wasn't near the low. It was like after the sort of bull market run had begun or was about to begin. And then the last cycle here, in between the two peaks, we went down to these levels. And then again after the cycle high, we hit them and then back again on the way down. And then it wasn't quite the low last time in the last cycle back in 2022. But it was near enough. If you bought there, you wouldn't really be able to tell the difference between buying the low and then buying at these levels here. The difference is, well, in price, what do we got? 16 grand to about 20 grand, which sounds like a lot when you're down there, but when the price goes up over 100K, you don't really care. And is it really worth waiting and taking the risk of not buying at 20 grand because you're hoping it will go down to 15 grand and then maybe you just miss it altogether and then it's up at 100 and you just think, why didn't I buy anything? So this is the Bitcoin bubble indicator. This is how we can use it to help us identify important levels when investing in Bitcoin. It's just something, it's a tool that you can use to help take the risk out, essentially. And there are a bunch more of these tools on my website, which is cryptological.app. We've got a free tier if you want to just have a little look around with some of the free charts, or we have a subscription fee, which is, I tried to keep it very low, lower than a lot of the other alternatives that are on the market that provide these sorts of charts. Just because when I was looking, I didn't have money to invest and also to pay $30, $40 a month subscription fees. So this is like £10, about $13 a month, with no obligations, cancel whenever you want. But there's a bunch of useful charts that I think can help. And this was a Bitcoin bubble indicator. So hopefully you got a good understanding of what this chart does. If you want to understand other charts on the app, then subscribe to the channel and I'll be making more videos soon in the future. If you like the content, give the video a like. Until next time, I'll see you later.